just a few weeks ago, Levi Strauss went public. This morning, Levi's came out with their first earnings report. First quarter revenue came in 7% higher than a year ago. You looked at the report. What did you think?
Yeah, I was surprised. I'm not going to lie. I was a little bit skeptical when Levi went public. I immediately thought, this is going to be kind of a short-term pop situation, and then people are going to remember that they sell jeans. And then it's going to be like, oh, they're not bad jeans. Not at all. And it's not a poorly managed company at all. But ultimately, they're still a clothing retailer. And we've seen the market really just punish these types of businesses over the past few years. So 7% revenue growth was much better than I personally expected. The company reiterated their previous guidance. But if I'm honest, I'm still not excited about 7% revenue growth. And maybe that's because I invest more in high growth companies. But at the price that they're trading at today, it's clear that people expect great things from Levi's. And that's not to say that they won't be able to deliver on them, because 7% revenue growth, like I said, for this industry is amazing. But it is to say that the expectations are high, and there's not a lot of room for Levi's to trip up here.
So let's go back to market caps for a second, because JetBlue has a market cap of around $5 billion. Levi, as you said, they go public at $17 a share. On opening day, it pops to $22. It's up a little bit on this report. It's, I think, now at $23 a share. It has a market cap of $9 billion. And that's the thing that I focus on when I look at this. Again, they make a good product. They do a good job managing this business. It's hard for me to say that I really like this stock where it is, because I look at them and just think, okay, you've just come public. It's a $9 billion valuation, which really seems pricey to me. And this is absolutely an example of, I want to see a couple more quarters of them in the public markets before I put this stock on my watch list.
Exactly. I'd want to see their ability to continue to deliver on those types of numbers. And right now they're trading for a price of sales of about 7 times. So essentially, if you buy the stock today, you're paying a price that is 7 times the sales per share that the company has. And that's significant because the average in the industry is less than 1 for clothing retailers. And that's not to say, like I said, that Levi's is average, because admittedly, it's probably a company that does deserve a bit of a premium, because if any clothier has growth ahead of it, it's Levi's. But it's not to say that it's a cheap company at this point.
Well, and you look at the apparel retail space, pretty much every company at some point in time has put together a good 12 months. And by a good 12 months, I mean a 12-month span where shareholders were rewarded for whatever the long-term performance of companies like Gap or American Eagle or Abercrombie & Fitch. You can find a 1-year period where, boy, that was a great time to own that stock. But over the long term, it's a really tough business, and it's hard to feel like any of those stocks are ones that you would not have on a short leash.
Yeah, exactly. But every single time I've made that comment, those companies have turned around and performed wonderfully. So I've become a little bit hesitant in feeling confident about the cyclicality of certain industries, retail being one of them.